I don't think we see manipulation of the Bitcoin price at a level that is sometimes suggested on Twitter. Certainly not like gold, because it's less possible than gold as well. But I do see spoofing a lot, of course. And there are some accounts that track the orders or all the bids and asks through time. Very interesting graphs and charts being made. And so you can analyze dynamics, the bids and asks. But there is definitely spoofing going on. And everybody that trades knows this. The big, indeed, sell walls that disappear once the price goes up. Same with the buy walls sometimes. Because the market is sort of unregulated, and spoofing, of course, is illegal. But in Bitcoin, you can do it. There's a whole scare tactics game going on, and especially retail is very vulnerable there. So that happens, yes, but not in a way that it can suppress price forever, sort of thing. And also, just to give that some data, some underlying, it's if we look at the big price swings of Bitcoin, those were not caused by manipulation. You can easily attribute those to other things. Macroeconomic big drop in last year was caused by the Chinese mining ban, very explicitly. And the big drop in the year before that, in 2020, was in March. That was the COVID scare that was visible in all markets. The current drop, maybe from last 2 or 3 months, is caused by the inflation possibility of the rate hikes by the Fed and the 10-year interest rates really going up from 1.5 to 1.88%. And even before that, I think you can attribute all the major drops to some macro or Bitcoin specific event and not so much to manipulation. It's Occam's law, basically, Occam's razor. The simple explanation is that's a macro or Bitcoin specific event and not manipulation. The end of 2017, when the futures market started for Bitcoin, since then there was talk about manipulation of the Bitcoin price and that Bitcoin would never see 20,000 again because now there is futures. But here we are at 40,000. So we did see that 20,000 again. But from my point of view, as an ex-institutional investor, I should say, because I quit my job in March, as you probably know, I see derivatives markets, futures is always the first, as a good thing. Natural growing up of the market as a maturing markets should have derivatives markets, because derivatives markets slice and dice the risk and return profile of the underlying asset and make it more accessible to participants that would otherwise not invest in Bitcoin. For example, a lot of traditional finance institutions, say the ETFs that we now have, the futures ETF, a lot of the funds are not equipped in their back offices to handle Bitcoin, to handle all the keys and the wallets and the processes that go with it, that not one asset manager can walk away with all the Bitcoins. That's what we have seen in some exchanges, of course, over the past couple of years. So they're very scared about handling the Bitcoins themselves, and they're very happy to pay a premium to not have to do that. The same thing with gold. So some gold investors rather have the paper than having to buy vault and guard the vaults, insure all the gold in there. So there is a very large group actually of traditional finance people that rather have paper Bitcoin. Futures makes it possible to have exposure to the asset without having the asset. Diversify. I know it's a ugly word, but it's always good to diversify a little bit, because it's not only prices going down, but markets can go down or close. Maybe for Bitcoin, that's a bit difficult, but bans or making Bitcoin illegal, closing down exchanges, that's something we have seen in the past. If you depend on your Bitcoin, right now we're in a moment in time that we still need fiat for most exchanges, most other transactions. So until the time is there that most people accept Bitcoin as legal tender, but for their services and trades, until that time, it is wise to diversify a little bit into real estate, gold, have some fiat for liquidity, short-term purchases, that it doesn't disrupt your life if something happens. I guess that's always a very smart thing to do. And with Bitcoin, indeed, I guess the next level would be right now. It's an asset. It's an investment. You can trade it. You can make money. You can trade it, but really use it as payment for your services. That is something that is interesting to look at. That is also a form of hedging because it makes you less dependent on the fiat world. You could buy your food and fill your car, your gas with Bitcoin and get paid in Bitcoin. The whole dollar doesn't matter that much anymore to you. If you could rent or buy your house in Bitcoin, whatever, the dollar is not important anymore. So that's the next phase, if you will, the next level of Bitcoin maturing. The whole case of El Salvador is a big step towards that. So I really hope there's more countries indeed following that lead, because that would create some spots in the world where you can always trade your Bitcoin and buy a house with Bitcoin and buy food with Bitcoin. Mm-hmm. And then the entire concept of the dollar or fiat goes away. The need for that goes away. Right. Well, maybe one more thing, by the way, the US perspective versus the European perspective for futures markets and maybe also option markets, derivatives markets for Bitcoin could be different, because Americans are forbidden to, or it's illegal for Americans to trade on unbanked exchanges like BitMEX or Deribit, where you can only send Bitcoins there, trade whatever you want to trade, and then withdraw in Bitcoins. They don't have a fiat on and off ramp. For Europeans, legal. So we do that all the time. We just send Bitcoins somewhere, trade some stuff, get the result back in Bitcoin. That whole withdrawal thing, the risk that you cannot withdraw if you enter a futures contract. So when it's cash settled, for example, in the CME, right? I think the CFTC makes it compulsory to go through CME for Americans. I don't think there's any other big exchange at the moment that does futures and options that you can access. But for a lot of people outside the US, there is. And these exchanges flourish and they don't have the risk of non-withdrawal because they're all Bitcoin based. There is no fiat. The manipulation risk could be higher perceived by US citizens than non-US citizens.